What makes the idea of blockchain valuable? An interview with Mark Rizzn Hopkins. I mean, I've almost doubled my money, in a month.
Yeah, it's extraordinary because you talk to folks and they'll say, oh man, I guess it's too late. So they don't act. And guess what happens? It's too late. It continues to be too late for them because they're not acting. When I told you what's happening, you said, I'm jumping right in. And so that was the difference. You made a choice.
Interested in Bitcoin?
Bitcoin is a very vague concept to a lot of people.
Need to know more about cryptocurrency?
We're going to talk about the basics. This is something that people just have no idea about what crypto is.
How about buying, selling, and mining?
Tony, I think that's one of the things that's going to make us a little different from some other shows.
We're getting our hands dirty.
Then listen to Gary Leland and Tony Sakala, better known as the Crypto Cousins, on the Crypto Cousins podcast.
Howdy, howdy, howdy. Welcome to today's show. Gary Leland here.
And Tony Sakala here.
Together we're the Crypto Cousins, as you know. Hey, Tony, I think we got a great show today. We got a great interview with Cousin Rizzn.
Cousin Rizzn is amazing.
Cousin Rizzn tried to get me in Bitcoin when it was like $300.
Yes, he's been in for a long time.
But at least you talked me into getting in it when it was $3,600. It's better than getting into it at $8,200.
It's amazing. I'm really amazed. I predict it's going to go to $1 million, but every time it goes up even a few $100s, I'm still amazed at how quickly it's moving.
They say the best time to have gotten into Bitcoin was when it was 25 cents. And after that, I say it's the best time is now. As you wherever you're at, wherever it's at, the best time is to just start getting in it.
This week's price.
Today's price, almost need a drum roll for this, I feel like. $8,245.19. That's up. Now, that's up from last week's show when we recorded. Oh, my gosh. $1,629.73 since last week's show for a 24.6% increase. 24.6% in the last week, Tony.
Who would have predicted?
That was a good time to get in.
Yeah. Exactly.
Well, we do have to say, though, Tony, there was a little dip last week, but the dip wasn't. It was still down from last weekend's Bitcoin Cash ordeal.
That was an artificial experience.
But it was still down a little. So because last week was the first show we've done where when we read the price for the week, it was actually down.
That's right. Yeah.
So part of this week's big jump is catching back up on that artificial decrease, as we could call it, or it wasn't artificial, but the attack on Bitcoin by Bitcoin Cash, which lowered it a little, so it gained back and it made a profit.
Yes. And, just year over year, it's just been an incredible ride as well. What was it last year? Last year it was roughly $740.
Now, that would have been a good time to get in, too. But Tony, hindsight, and everybody listening, hindsight is 20/20, and we say, oh, that was a good time to get in, and those people look like geniuses for getting in. But I imagine when people bought in at $700 a year ago, and they told their wife they're going to buy some Bitcoin that's e-currency, money they can't get, and they're going to spend $700 on it, their wife treated them the same way, and they had the same fear that they were maybe throwing their money away that people have today when they buy at $8,300. I bet you the experience was exactly the same. Now they look like geniuses, but they weren't sitting there going, I know for a fact it's going to be $8,300 come November 21st. I'm going to buy some. They were having the same fear, doubt, uncertainty that everybody does no matter what price they buy it at. Will it go down tomorrow?
Right. You can't see the future. So it is a fearful experience for folks that are not, they haven't drank the Kool-Aid like we have.
Hey, I want to mention to everybody, Tony and I are not financial advisors. We're just two guys that like Bitcoin and cryptocurrency. We like the tech. We enjoy doing these shows, and Well, Tony, when we started doing these shows, we did them, or we decided to do them, to help us grow and educate ourselves on Bitcoin, and that we would grow and educate ourselves while sharing information with others.
Yeah, and you've learned a lot in, 6-8 weeks? I mean, it's just been amazing how you've gone from almost zero, to, really, you just pretty much know as much as I do.
Well, I have sucked down a lot of information in the last few weeks. But today, matter of fact, though, it's kind of funny. I think when you hear today's interview, Tony, we did this interview with Cousin Rizzn, and we kind of had it in the can. This was going to be our first interview, but then we had the opportunity to interview Trace about Segwit 2X, which was pretty important at the time, so we jumped that to first.
Mm-hmm.
But the thing I'm making about this show is the fact that when you hear me talk on this show, we did this show, recorded this interview before we even did our first episode.
With Trace Meyer.
Right. No, we recorded this interview before we did our first episode of this show at all.
Oh.
Before we did episode 1.
I forgot about that.
So my knowledge on this episode on this interview is really, really lacking. I mean, it's probably to the point that I'm going, should we, in my mind, I'm kind of thinking back, maybe we shouldn't play this because I don't know anything about Bitcoin at this point. So this interview you're going to hear is me, Tony now. I mean, Tony knows as much now probably as he did 6 weeks ago for the most part. But,
I haven't been learning that much.
Yeah. Well, you've been learning some, but not at the rate I have, because I came from a much lower point.
Oh, yeah, you're listening to like 50 podcasts a week.
Yeah, so these questions I'm going to be asking now may sound kind of simple, but maybe they'll help our listeners who are starting out, because I'm asking from a early enthusiast point of view. So I do know more now than I know on this interview, I guess is what I'm getting at, Tony. Hey, Tony, I also want to tell everybody, last week we had a show about whether we should do donations or whether we should take sponsors. We couldn't decide, and we had a little bit of input from some listeners, which I do appreciate. And so I have started a Patreon page just to see how that would go. Mm-hmm. And the Patreon page, Tony, for those who don't know, is a page where people can say, hey, we like what Gary and Tony are doing. We want to show a little support. And you can set up a kind of like a regular donation of $2 a month or $5 a month, or gosh, you could even do $1,000 a month. I don't think we have a spot on there for that. But if someone wants to, we'll make one, right, Tony?
Yeah, we will.
So if anyone's interested in helping us out with the show, go to cryptocousins.com/Patreon, Patreon. It's cryptocousins.com/Patreon. If you're in your car, you can listen to this again when you get home. But if you want to show us a little support and throw us a bone, we're hoping to be able to get some backing so we can go to some big shows and get interviews with great people from you, because we just can't afford to do that out of pocket. So if you like what we're doing, check that out and see what you think about that.
Well, it's been a big week for Bitcoin in retail. I hear one of the biggest retailers in Texas is taking Bitcoin.
Well, I don't know who that would be, but I'm taking Bitcoin. I put a sign on my sporting goods store at the register and in the store, now accepting Bitcoin, a pretty good sign. I did that, Friday? But no one has asked yet. So I'm kind of curious to see. I didn't really expect people to be knocking down. Oh my gosh, go inside. He's selling Bitcoin now. Let's buy some softball bats. I didn't expect that to happen. But I'm kind of curious. I did it more just to see what kind of response I would get. If anyone would even ask about it. If people go, I'm hodling. I don't want to get rid of my Bitcoin, but it's good to know. Or if they go, hey, do you take Litecoin? Or do you take Ethereum? But no one has said anything yet. So I don't know if the sporting good people are that up on what's going on with the cryptocurrency. So I will report, though, when I have my first person ask and when I make our first sale. Hey, also on the donation factor, people can still always go to cryptocousins.com/donate if they want to, if they don't want to set up a regular Patreon or reoccurring donation, but they want to help us out there. But yeah, We'll find out what's happening with the Bitcoin soon in the store.
Well, I think mainstream adoption is coming. It's coming down the line. And it's really what people do every day is, they reach into their credit card and, they pull out the plastic. And I think what you mentioned last week about getting your card. Have you gotten your card yet?
That hadn't arrived yet, so I should get that this week. So hopefully on next week's show. What I'm going to do is when I get my card, that's for those who don't know, last week we talked about the Coinbase Visa debit card, where you can put Bitcoin on a debit card and just go shopping with your debit card, just like you would any debit card. And I ordered one. But when those come in, Tony, I'm going to take that card and go to 7-Eleven and buy a cup of coffee, and I'm going to film it. The show.
There you go. It'll be, yes.
The guy at 7-Eleven, he stopped me this morning. He has 3 Bitcoins.
No kidding. Okay, did he see your lapel pin?
No. His son had found me on Facebook or something, or listened to the podcast. And so he was asking me, do you think it's going to go to $1 million? I said, well, it could. Who knows? I'm not a financial advisor. I can't. But he told me he bought 3 at $2,300. And his son talked him into it, and he said, this is crazy. Then his son talked him into letting him control one, and he sold it and bought some other currency that was a ripoff, and they lost all their money on that one. So he still has 2 left. So I thought that was pretty interesting that he has 2 Bitcoins, and he stopped me to talk about it at the 7-Eleven. Hey, also I want to give a big thank you to everybody who's been subscribing to this podcast on iTunes. Oh my gosh, Tony, we are rocking and rolling. And I've been podcasting since 2004, and I've never had a podcast grow this fast. This thing is taking off like fire. Everybody must be telling their friends about it, I assume, and subscribing and leaving us comments, because our rankings are going up. We're number 8 in iTunes now under term Bitcoin. I mean, we are cooking, Tony.
Well, I'm not surprised. Every time we post about it, we're getting responses from all over the world. We have people finding us in Australia, in Canada. We have a moderator in India. I mean, I think
we have a new moderator now in Canada. We have that's up there. We have cousin. I hope I'm pronouncing your name right. Tellison Coburn from Canada. He's a moderator. So we have 2 in the U.S., 1 in India, and 1 in Canada. Let's get this whole world covered, Tony.
Oh, fantastic. Oh, yeah. He friended me on Facebook, so I didn't know where that came from. So now I see it came from there. Fantastic.
Yeah, so we're getting people, moderators. What they're doing is they're like adding people to the group. They know that are interested. They're spreading the word. If anyone spams, the thing that's good about our group, Tony, if anyone spams it, they're out of there. That's the rule. We don't even give you a warning. You spam our site, you're out of there. We're kicking you out. We're not even warning your butt. And if you come back and you say, hey, I'm sorry, I didn't know the rules, which are clearly there, we might let you back in, we might not. But this is a site where it's not people trying to get you to buy their coin and rip you off. It's just for us all to talk about crypto in a nice, safe environment where people aren't attacking you or trying to sell you something.
Exactly. The idea of these initial coin offerings is very compelling, as we said with that fellow who lost to one of his 3 Bitcoins to some sort of coin scam. Yeah, I'm sure his kid got excited. Like, oh no, it's the latest thing, and it's going to be great for video games or whatever it was. So.
Yeah, I made some money off of 3 of them growing up. What can I do with this one? But he was happy. He goes, I've still got 2 and they're worth way more than the bottom. Hey, Tony, it's time for
Crypto Cousins News.
And what do you have today, Tony?
Well, talking about the mainstream, we recently heard that Square is going to be taking Bitcoin. They really they're going into it like experimentally, but as you know, Square is one of the ways that local merchants take credit cards, and you just swipe a card at a register or on your phone, or they have a special device, point of sale device that people use. You see them often at events, and Square is
that's all people usually. You see them with an iPad, a little white thing on the end.
The little white thing, exactly. Right. That little dongle, and people swipe. So it's really hitting this small business in a big way. Square is looking to add maybe 30 million in annual sales from Bitcoin in 2 years. That's what one of the big financial firms estimates.
Well, their stock has gone through the roof since they announced this.
That's been really surprising. So there's been a really great positive response to adding Bitcoin. So I think it's going to be the same with your local business.
Yeah, well, that would be great because I don't mind taking Bitcoin at all. But they've rolled this out. Square has rolled this out on some people's accounts, but not on everybody's yet.
It's still a little bit in beta. Mm-hmm.
Well, yeah, it's not on mine because as soon as I saw you posted this, I pulled up my Square on my phone and opened it, and I don't have access to it yet.
Okay.
So I guess they're doing a test beta run kind of maybe right now. And then they're going to add it to everybody's, I guess if it goes like they're hoping, I would think with their stock going up like it did, they aren't removing it probably. They don't want to see that stock dip.
Yeah, well, they probably made 30 million already in value.
Just the stock going up.
Exactly.
It went up like, I don't know if I'm right about this, but I think maybe like 20% or something. I mean, it went up quite a bit. But so did Overture stock went up a lot when they added crypto. I saw him yesterday, the guy. I'm just kind of bringing this in because we're talking about people taking Bitcoin. Overture, I saw I think it was the president of Overture on...
Overstock?
Overstock, thank you. Yeah, Overstock. He was on a business show yesterday morning. And he was talking about their taking Bitcoin and how the stock had gone up a lot. But he mentioned, which is showing you what is happening to me, he mentioned that since they've been taking Bitcoin, really only about 1.5% of their sales are from Bitcoin. And they take it, from what I understand, they take Bitcoin, they immediately cash in half their Bitcoin when they take it, and they hold the other half as an investment.
That's really, really, really clever.
Yeah, so that's their strategy is to take Bitcoin. If they get a $100 sale on Bitcoin, they cash in and get $50, take that right away. That probably covers their cost on what they sold, maybe. And then they keep the other $50 in Bitcoin as an investment, which if they've been doing that for 6 months, they've been cleaning up.
They've been cleaning up. That's amazing. That's a really great strategy. It seems like that also may be an idea for what the adoption rate is. So maybe like 1% of people who shop online.
Not unusual. No one's asked me.
Yeah.
Now, I found this interesting. My news is not quite as more fun than yours, I think. But Bitcoin is going to be featured on the TV show The Big Bang Theory. So that's kind of cool. Bitcoin being seen, out in the real world, kind of educating people about Bitcoin because they're seeing it. The more people see it on TV, I think the more they get too comfortable with the term and they go, "Oh yeah, I know what that Bitcoin is." Instead of going, "No, I don't know what it is." But the Big Bang Theory will be airing an episode entitled "The Bitcoin Entanglement." I like that, the Bitcoin entanglement, Tony.
Yeah, it sounds very interesting.
Yeah, on November the 30th, so end of this month, the episode will revolve around the characters in the show as they find a laptop. Now, things start getting interesting when the guys discover the laptop contains Bitcoin. So that's the pretense of the show. They find this laptop, and I think they know the guy that has whose laptop it is, and then they discover there's Bitcoin. I don't know how much Bitcoin, but they discover there's Bitcoin on it. So
it sounds like maybe there'll be some moral issues.
Yeah, well, I've recorded this one. I already set this one up to record. I want to see this one. Hey, but mentioning TV, Tony, I was watching TV Thursday night, I think it was, and I was watching. I don't even know what I was watching, and I get a text from my daughter. She's a big Grey's Anatomy fan, and she said, "Hey, they mentioned Bitcoin on Grey's Anatomy. You need to turn to the channel."
Wow.
And so I turned the channel to Grey's Anatomy, which my wife records. So it's recording. So I just turned the recording and forward my way up to it till it does it. And they mentioned Bitcoin. The hospital had their records all seized by some hackers. And they wanted 5,000 Bitcoins. to give them back.
Wow.
And it was not shown in a good light, but it did mention the term Bitcoin, which I think anytime it mentions the term Bitcoin, people just get that in their vocabulary, whether it's good or bad, just that they know it's Bitcoin. But the funny thing about it, the doctor on there, the FBI comes in, and they're setting up all their equipment. They're going to help track the hackers. And the doctor goes, "What do they want?" And he goes, "Sir, they want 5,000 Bitcoins." He goes, "Well, I'll write them a check for that." He's $5,000. He goes, "Sir, that's almost $20 million in today's money." And then the nurse goes, or the other doctor goes, "Ready to write that check, fat boy?" That was funny. I thought that was really funny. Hey, we get. Go ahead, Tony. I'm sorry I stepped in.
Well, it's there are good and bad uses for anything. There's good and bad uses for cash. There's good and bad uses for, a kitchen steak knife. It's just a tool. It's software, and software in the hands of good people, can feed people in countries like Venezuela. And software in the hands of bad people is just going to be used, for bad stuff. So it really is. It's not. Software is neutral. It doesn't have a moral code. It just has source code. It's people who have a moral code.
I just think the fact that anytime you see them talking about crypto on TV, it's just help educating the public as a whole. And then it gets to the point, the more people know about it and they're more comfortable with it, the better it is for anyone like you and I who are hodling on Bitcoin.
Exactly.
Okay, and we do have a comment this week from this person left a comment. Oh, this is a great question, Tony. This is a comment from David Henry. He sent us a message about our Ethan. I did a video on setting up our Ethan miner. It's in case you don't know, we sell miners. Mining equipment, I guess you'd say, or mining computers on our website, cryptocousins.com. We have a store there. And David Henry asked, first he said, "Thanks for the video. Just subscribed to your podcast the other day, and I have a question. What are the steps to switch the Ethan from mining Zcash to Ethereum? Is it a hard process to switch back and forth?" Because on the video, Tony, I showed him, that you buy our machine. I took it out the box, plugged in the Ethernet cable, plugged in electricity, turned it on, and I was mining Zcash. That's how easy it is to use. And he wanted to know how hard it would be to switch it from Zcash to another cryptocurrency. And I'm going to let you answer that because I don't even know how to do it yet. I just know how to mine I just know how to open the box and plug it in.
We like Zcash, and a lot of folks want to mine alternate coins. And right now, the marketplace for crypto software is very, very slim. There are only a handful of programs that are running, and the operating system that we are running, called Simple Miner, simplemining.net, runs a list of mining programs, and there is an Ethereum application that you can switch to. So you just log into the web page that we provide for you and choose a different coin and make sure that your wallet address is in the right slot. That's the important step. So otherwise you'll be mining for the developer. The default address is always the developer address, which is pretty wise because people forget.
When we send them that, that's already done.
We've pre-filled all of the fields with folks' addresses in the software, so generally it's set up properly. Yeah. And then you just click a new coin and reboot the computer, and it'll start running.
So basically, you just go to the Simple Mining software, and under one of the tabs, it asks you what you want to mine. I guess I hadn't even looked at it.
Mm-hmm. Yeah, there's a choice of different programs to run. Okay. And you do have to know, you have to know, what you want. If you want to switch from Zcash to Ethereum, you obviously been reading up on Ethereum. So you can switch and do that. Yeah, it's pretty simple. It's simple. We call it simple. We use simplemining.net, and we want to keep it simple. This is a miner for someone who just wants to plug in, not worry about it. Maybe you're a dentist, maybe you're a doctor, maybe you're an accountant. You're not a computer programmer. You're not a hacker. You're not an engineer. You're not an electrical engineer. You could be a softball coach. Exactly. You could be a psychologist. You just want to plug it in and just say, hey, I'm mining, and I think it's a fun thing to do on the side. You know, you're not going to turn your home into a mining farm. You just want one miner, and you want to see what it's about.
Well, I'm sitting here right now. Across from my desk is in my studio here is my mining machine, and I just watch the monitor as it does hashes, I guess, or solve solution. And making money. I like checking every morning to see how much money I made. So, hey, Joe, thanks for or Henry, David, thanks for the question. And, hey, if anyone wants to see that video about me setting up the mining machine, just go to our YouTube channel at cryptocousins.com/YouTube. And in case they hadn't figured it out, Tony, you just type in cryptocousins.com/anything you want to go to, and we should be there. If we're not, message me and let me know so I can do it. That's our listing method.
/Twitter. You'll be on Twitter.
Yeah, / Facebook group. Hey, we also got a phone message this week. I love phone messages.
Yeah, folks are calling in. It's safe. You know, we're not going to pick up. It's just a voicemail. Go straight to voicemail. You don't have to talk with us. You can call when you're tired and you don't really know what you have to say. Just call in anytime and just leave a message. It's really fun.
Call 747-777-9471. And 747-777-9471. We got a lot of sevens there, Tony. What do we got?
Yeah, just
6
calling
sevens.
the number makes you luckier. I promise.
Yeah, you might get some more lucky solutions on your mining machine just by dialing that number, right?
Yeah.
Hey, let's listen to this message from Joe.
Hey, Crypto Cousins. This is Joe in Pennsylvania. First off, thanks for what you're doing. I'm maybe a month behind you guys. I just got into the cryptocurrency and starting to try to learn as much as I can, and your podcast has been very helpful. And only question right now is I found something called NiceHash. Allows you to mine on CPU or GPU, and you mine, I think, for other people, and you get paid in Bitcoin. So you mine, I guess, for different currencies or a variety of things. But my question is that worth it? Should I do that? Should I mine for direct different currencies? Just want to get your take on it. Thanks again. Bye.
Okay, Joe. Thanks from Pennsylvania there. What do you think, Tony? He's been in it like for about as long as I have. So him and I are on the same basis there.
You know, Joe's found NiceHash, and I think NiceHash is a really great on-ramp to mining. You can just pull up a computer that you have sitting around. How many people? If you have PCs, you probably have a couple of old PCs lying around, and plug it in. Go to the NiceHash website, and they have a calculator, and it says, this is your PC, and this is your coin that you might want to mine, and it gives you an estimate what kind of return you might get. So I really am a big fan of NiceHash.
So I tell you what I'm going to do. I got in my office, we have a bunch of desks, and we're kind of short-handed right now. So I've got, I think, 2 computers over there that just stay off all day. They aren't even being used. I think I'm going to turn those on and set up NiceHash on them until I hire an employee to take that desk. I might as well be making some money off those desks.
Yeah, well, the NiceHash has a great set of charts, too. It'll tell you exactly what coins you've been mining and what percentage has been contributing to your payout. And NiceHash pays out only in Bitcoin, so they convert it all to Bitcoin for you, and then you deposit into your Bitcoin wallet. And it's a lot of fun.
So, I'm going to do that today, get one of those going today. Heck, I may end up, everybody working there may be mining Bitcoin. Everybody working for me may be mining Bitcoin before we're over. That's no problem with me. Hey, I guess we better get into this interview. We usually like to keep these shows 30 minutes, and at the rate we're going to do all 30 minutes with you and I chit-chatting here and doing housekeeping. Yeah, we haven't met the 30-minute mark yet, Tony.
No.
So we might want to change that to we try to keep them under an hour because we are not very. But then we probably do an hour and a half.
Yeah.
So let's get to the interview here. Like I said, the interview is with Mark Rizzn Hopkins, and it's what makes the idea of blockchain valuable. And just to give you a little bit about Mark, he was associate editor at Mashable.
Mashable,
2007 to 2008. He was a founding editor at SiliconANGLE Media, from 2008 to 2016 in California. He's the chairman of Roger Wilco Agency. I like that, Roger Wilco, over out. And the chief technology officer at Boardfolio, and a wizard at Barista Ventures. He's the wizard in residence.
Oh,
so
cool.
I don't know what that really means.
Well, I mean, that means when people book an appointment with him, it's going to cost a lot of money. Maybe even some magical spells, some gems. You have to bring some. When you see a wizard, you got to bring some cool stuff.
Yeah, you're in for a costly adventure. But yes. Mark, like I said, he's been doing Bitcoin like the longest of anyone I know. And I just wish I had listened to his advice. I think he was a futurist for IBM or something at one time too.
Oh yeah, no. He's still a consultant with IBM. And the work he did with SiliconANGLE Media, they basically went to IBM's biggest conferences, the Interconnect conferences, like 150 a year they do, and they were the media for it. They were interviewing all of the heavies in the IBM's software and hardware space, and so yeah, they use Mark as a consultant regularly.
So he's got the credentials.
Yes.
So when he says something's going to happen in the future, he knows a little more than you and I do, because we're just guessing. He has some knowledge that he's basing that off of. Well, why don't we go to the interview, Tony, and let's let him tell that. Hey, Mark, thank you for joining us tonight. It's so exciting to have you here. I think we're going to have to make you, Tony, what do you think? I think we need to make Mark our first cousin Rizzn.
Yes, fantastic. Welcome, Cousin Rizzn.
Well, thank you for having me. You're already in the family.
Everyone's in the Crypto Cousins family, right, Tony?
That's the way we like it.
Well, Mark, you've been doing this forever. I mean, I remember when I used to see you back in Live Lobster Studios, and I so wish I'd listened to you back then and started doing it. But tonight, we're not talking about my mistakes and how smart you are, but we're talking about blockchain, and the topic is what makes the idea of blockchain valuable. And I'm going to just turn it over to you to start with. Let's get into that. Let's start this conversation. What does make the idea of blockchain valuable?
And it's a particularly timely topic too, because Oracle this week just came out with a big announcement. You know, when Oracle is finally jumping on the bandwagon, it's starting to come along. Because they were the last holdout for cloud, right? They were I think it was 2012 before they finally admitted that the cloud was going to be a thing in the enterprise. So it's a similar deal with Bitcoin and blockchain. This week they finally said, you know what, we're going to get on board with this whole blockchain thing. And the value that they saw and the value that IBM and others have seen is that the core proposition, the value proposition for blockchain is that it has the ability to take the requirement for trust between counterparties out of the equation. So what that means is, like, in the simplest sense, the reason why you use a bank, I mean, there's a myriad of reasons, but the core reason why you use a bank to write checks and to make payments and to, put money into the Wall Street or wherever, whatever you're doing with your money, there's always a bank involved. And the reason being is because usually the person you're doing business with doesn't 100% know you enough to trust you, right? So they if you say, hey, I'm going to give you a promissory note for $100, they'd rather that the bank be the guarantor of that note, because they know they can go after the bank as well as you if that money doesn't go through. If you're trying to broker a deal and send money to the other side of the planet, you need a trusted third party in the middle to facilitate that transfer, because you can't physically hand $100 cash to somebody in India. So the core value proposition of blockchain, it takes the requirement for trust out of it. All you have to trust in for blockchain to work for you is Newtonian physics. As long as you believe the apple will fall from the tree and hit the ground, and that's how the world works, then blockchain will continue to function along the algorithm that it's set to do, and things will go as they should.
So I can see that if you're buying a house They wouldn't want me to just say, hey, I'm going to send you the payments. They want to get their money, and then I send the payments to the bank. Is that what you're saying? In your example?
Right, yeah. In my example, right, yeah. Basically, the bank is the guarantor that those payments are going to go through because they don't know you from Adam, typically, if you're buying a building, And so they have heard of Bank of America or whatever bank that you're doing business with. And so they go, oh, yeah, Bank of America, I know those guys. Yeah. If they say the money's coming through, then it's probably going to come through.
Well, I have a question about the blockchain. How does it work separate from Bitcoin, and how does it work, with Ethereum? Like each of them, are they using it in a different way, in the same way?
So there are as many different blockchains as there are, cryptocurrencies out there. As a piece of terminology, though. It's kind of the term blockchain didn't exist before Bitcoin. So, and if you're going to think about it like a technology, Bitcoin is the reference architecture for blockchain. Like you'll sometimes see people who are maybe Johnny come lately, or they're in the financial sector, or maybe they're Silicon Valley types that have just latched on to blockchain. Bitcoin as a technology. And they go, oh no. Bitcoin is not blockchain. Blockchain is not Bitcoin. They're two separate things. They have nothing to do with each other. That's a surefire signal that person actually doesn't understand what they're talking about. So I just wrote a blog post a couple weeks ago about it because it was triggered. This exact caution was triggered by probably saw in the news Jamie Dimon, CEO of JP Morgan, who very famously denounced Bitcoin, said he would fire anybody in his company that was working with Bitcoin. Bitcoin is a scam, blah, blah, blah. Then, of course, a couple of days later, it was found out that the biggest buyer of Bitcoin during that day when he was giving that speech was actually JP Morgan. But that's a different story. But in the discussions I was having with JP Morgan professionals that were trying to defend Jamie Dimon's statement in the alignment with JP Morgan as an organization that is heavily invested in blockchain, I actually had somebody in their R&D department say, hey, blockchain is a completely separate technology from Bitcoin. And it was shocking to me that somebody whose job was, developing, blockchain-based technologies didn't actually understand where it came from and was actually trying to make that distinction in their head. But that's the fact of the matter. So to directly answer your question, Bitcoin is a type of blockchain technology, but there are dozens of different ways to implement blockchain technology, and we can go down the list and start categorizing them. That's the short answer.
The other question regarding that is, so what is the trustless part of it? I mean, is Oracle bringing in a central party to the blockchain, or does it still have that trustless element?
So that's a good question. I'm actually trying to. Well, I did do a blog post about this the other day. So they're implementing a version of blockchain technology called HyperLedger. And it's been mostly shepherded by IBM up to this point. And I got to disclaim myself. I am an IBM futurist. They do pay me to go and speak at some of their events and talk about blockchain and AI and stuff like that. But as it turns out, I'm not a huge fan of their implementation of blockchain for one simple reason, is that I think that it leaves out, and they have the reasons for why they did this, but it leaves out the financial component of blockchain. HyperLedger doesn't necessarily require you to have a token as a part of their blockchain. And as a result, there's not a financial incentive built into the protocol of any HyperLedger implementation. There's not a financial incentive for participants to keep the blockchain alive. It's my kind of intuition or understanding that this was done because the reason why IBM was implementing this is they were trying to sell blockchain as a technology to companies like Walmart and large enterprise for Fortune 100 players. And the negative association with blockchain at the time was this is just basically like Bitcoin. And this was very soon after the Dread Pirate Roberts Russ Ulbricht Silk Road debacle, where there's talk about people hiring assassins, selling drugs, hookers, and all these other negative things. And, understandably, Walmart and IBM don't want to be associated with that. That's kind of a negative connotation if you're a big company. So, but I think in their zealotry to kind of make a palatable version of blockchain for some of these organizations, they kind of skip past some of the core value propositions.
I think some may argue they're throwing out the baby with the bathwater.
Yeah, and I have spoken with some senior fellows over at IBM who were kind of instrumental in the development, and their response to that is it's about stepping stones. You got to get them kind of hooked on the heroin, in some form or fashion, and then once they see the value and they want to take it further, then they will.
Hey, let me ask you a question real quick. I just want to make sure. Tony's been doing this a long time, and I'm kind of the newbie here at this. I want to make sure. This is a question I've had, and I've never asked anyone. On the blockchain, is that the blockchain, does it consist of just all the machines that are mining? Or who is the what are the machines of the blockchain? Where do they come from? In my mind, I'm thinking I know this is a really fundamental question, but I'm the newbie, so I want to make sure I understand this. I'm going to learn this stuff.
It's not a dumb question. There's a lot of this. It's a complex answer to that. And so I'm going to start very layman. And then when I start to get too technical, you guys just start talking over me and say, "Tell me to shut up." So, the very broadest, easiest way to perhaps understand this is when you ask the question, "What is the blockchain? Like, what does the blockchain consist of?" It's a very similar question to asking, "What does email consist of?" Right? So you're essentially, for all intents and purposes, blockchain is a type of protocol on the internet. It's a protocol for trustless interaction, just in the same way that email is a protocol for long-form communication, and FTP is a protocol for transferring large files across the internet in a server-client paradigm. So, when I say that there's a lot of different types of machines that the blockchain consists of, it makes a little bit more sense in that respect. Because if you're talking about email consists of Gmail, Hotmail, right? Those types of email servers. Then it also consists of your Outlook client or your Eudora client if you go back in time, or it consists of the actual SMTP and POP3 servers and all these different mechanisms, software, hardware, client side, server side. All that whole system makes up email as a protocol, right? Because they're all talking in the same language. So blockchain is very similar. You've got client software like Bitcoin wallets or cryptocurrency wallets. You've got server software in the form of nodes, sometimes master nodes and mining equipment. And you've got other things like blockchain explorers, so that if you want to look at what's being transacted in a somewhat human readable format, there's these websites that exist that just allow you to go back in time and see where the value is transferred back and forth, etc. So these are all like the things that make up the blockchain, right? So the permanent record, which is part of the question you're asking, the permanent record resides on what are called nodes, and those are peer-to-peer. In Bitcoin, there's no financial incentive to maintain a node. In other implementations of blockchain protocol, there is. In Bitcoin, the primary financial incentive is for people to run mining equipment, which often includes the activity of running a node, but not necessarily. So
how would you know? For instance, I've got a machine running mining Bitcoin, let's say. But that doesn't mean I'm administering a node.
No, that's right. So But if you've got a single machine mining Bitcoin, it's probably quite likely that you're part of a mining pool, and so it's also quite likely that that mining pool is running several nodes of their own.
Okay.
For reasons to just make their operation runs. They could also connect to somebody else's node if they so desired, but it makes a lot of sense if you're running a mining operation at that scale to run your own nodes.
Okay, that makes sense to me. So, because I was thinking it was just everybody who was mining was doing a little bit of, of it, but it's like a lot more complicated. It's like everything that's involved with Bitcoin is part of it.
Right.
Yeah, so everybody who touches the network, whether they're miners or they have a wallet, or especially if they're a merchant, I suppose, merchants as well form one of the main constituents, as well as miners.
Right.
With regard to the average person, have you seen a lot of movement towards the average person getting a wallet, going out and actually doing, retail purchases with crypto these days?
Yes and no. So, yes, I've seen a lot of movement towards cryptocurrency in terms of just the average person using it, much more so this year than any other year I've done it. So I've always kind of, for friends and family, sold Bitcoin kind of on the side, and just kind of let it float out there. Everybody knows, Mark, if you want to buy some Bitcoin, you can either talk to him, he'll tell you what to do, or sell you some of his own. So, and I've done that not necessarily as a profit-making venture. It's really not that profitable of an act. I can't pay my mortgage doing that. But it is kind of a good market test for me to kind of understand when interest is surging, because all of a sudden in 1 week I'll get 10 people say they want to drop 10 grand or 5 grand or $100 or whatever the level is. Kind of tells me what the frenzy level of the general public is. Kind of good barometer. And I'll say this year, the year 2017, starting in, I would say, May, there has been an incredible surge in the number of people that are interested in Bitcoin. In fact, don't just take my word for it. There's some stories out there you can read about the surge in users on Coinbase. They would think about it, that they actually were able to stay online and scale their infrastructure.
I recall there was some trouble during that time being a Coinbase user. Logging in now and then, there would just be some interruptions, but they handled it pretty smoothly.
Yeah. And there was one issue where there was a major market flash crash, and they handled that with some pretty good customer service skills. Refunded a bunch of people's money as a result. They've not been a perfect company, but imagine if your local Bank of America branch added 12 million users over the course of 3 months, and see how well they'd be handling things. It's pretty good. It's a testament to the protocol and to their team.
Mm-hmm. Yeah, they've done very well. I'm very impressed with them and their other trading platform, the GDAX platform.
Mm-hmm. Yeah.
The thing I was telling Tony last night, the thing I don't understand is when I wire money from my bank to CoinDesk, why does it take like a week? It leaves my bank the next day, and 7 days later they say, "Okay, now you have your funds." I'm going, "What happened for 6 days?" They could have drove it there in a car.
Well, depends on how you're doing it. I'm a pretty regular user of all their systems, so the secret to my success is I don't do the ACH movement of funds, because that's what takes that length of time. I only use that for. So I guess I should back up. I do 2 types of buying with Coinbase and other exchanges. There's one type of buying where it's got critical path for me to get it that day, for whatever reason. Maybe I sold a bunch of Bitcoin, or I'm buying a bunch of Bitcoin for somebody. Who knows, right? But it's critical path that I get that coin that same day. So that's when you switch over to the GDAX side and you use the same day wire transfer functionality. And it costs you like 20 or 30 bucks from your bank, and it costs you like 10 bucks on the GDAX side. But within, if you do it at the right time of day, you'll see the funds show up the same day. But that doesn't lock, the price does not get locked in until you actually make the trade on the trading platform. Whereas on Coinbase, even if it takes, a week or 10 days for it to hit your account, you're still locked in the price of whenever it was you bought it.
Okay, you said that, Tony. I didn't know that. I wasn't sure that you locked in the price. Like I said, I'm a newbie, everybody. I wasn't 100% sure that price was locked in.
Right.
Yeah, the price gets locked in, which is nice because 10 days later you realize, oh, wow, I just bought Bitcoin in the 3,000s, and today it's whatever, 4,200. So, yeah. Mm-hmm. I didn't know about the wire transfer, the same-day wire transfer. I hadn't seen that in the interface. That's a great tip. One other thing, Mark, a couple months back, maybe it was 2016, you did a little interview with someone. You guys talked about the dollar cost averaging.
Yes.
And that very next day I implemented it.
How's it working out for you?
Well, I mean, I've obviously, well, when I started it, Bitcoin was $560. So that's been very happy.
Yeah, I guess so. Yeah, dollar cost average, like people, and specifically because my company sells Bitcoin, I can't legally make recommendations about to people that are, especially in a business sense, I can't make recommendations about what you should buy or in which direction I think the market's going to go. It kind of gets into that Wall Street kind of SEC rules. But when people that doesn't stop people from asking me, crystal ball questions like, hey, what do you think Ethereum's going to be at 6 months? Like, yeah, I don't know, man. I mean, up, down, sideways, who knows? But what I do say is that you can rest assured the market is going to fluctuate. I mean, it doesn't take a genius to look at any cryptocurrency chart and go, it's going to go up, it's going to go down, it's going to do some weird stuff in the middle. And that's the strategy. That's the type of market that the dollar cost averaging as a strategy was made for.
So get back to our original conversation on the blockchain. So you said people don't really make money off their nodes in Bitcoin.
Right.
But they do in other blockchains. What blockchains would be an example of that?
One that springs to mind is Dash. They have, I think they may have been one of the first, or if not the first, to introduce the idea of supernodes. So Dash is a cryptocurrency specifically for enhancing some of the privacy aspects of Bitcoin. If just to explain that in a little bit more detail, if I send you a Bitcoin or $100 in Bitcoin, you're going to be able to click on that transaction, look at where you're going to be able to see that, okay, at 5 o'clock in the afternoon on a Tuesday, Mark sent Gary some Bitcoin, and it confirmed after 20 minutes or 30 minutes, and here it is, and yeah, all those details will be there. And not only will those details be there, but you'll be able to click on my transaction, my wallet address, and see when that money cleared into my wallet. You'll be able to go back and back and back to the point where that Bitcoin or that piece of value was actually mined. You can go back to the birth of every Bitcoin just by clicking the back button enough times on a block explorer. Dash doesn't let you do that. It still maintains the integrity and the fungibility of cryptocurrency and all these things, but it obfuscates where the value is coming from and where it's going. So you can see a transaction, you can see your transaction, your wallet, but you can't backtrack that to the birth of the coin. And so that requires some extra technical computation and some a little bit more CPU power. And so they created an incentive structure around running what they call master nodes that help enable that anonymization process. So it's just like mining. There's still mining in Dash, but the master node process also gets a piece of transaction fees for facilitating the anonymization process.
I see. So that and that enhances the privacy, obviously.
Correct.
And so, do all blockchains, all cryptocurrencies have mining?
No, there are notably two major kind of ways of securing a blockchain. There's what's called proof of work, which is where you have mining, and there's another version which is called proof of stake, which is where you're taking some amount of the token from that cryptocurrency and you're putting it in a position that says, I am using this 5 tokens or 100 tokens or 10,000 tokens that I have. I'm going to lock it up in this wallet and use that to secure the network. And so in just the same way that you could look at every terahash that you're contributing to mining on Bitcoin, each terahash is you could say, okay, that's one lottery ticket to winning, the ability to crack that the code, that SHA-256 encryption key for this block, right? Because it's all kind of random at a large enough scale. You're just all brute force hacking that SHA-256 encryption key. So if you think about a terahash as a lottery ticket into the process of winning that block, proof of stake is the same thing, except instead of using mining power, you're just using tokens, and every token you have is like a lottery ticket to winning that block.
Interesting. Doesn't that lead to the rich get richer type of movement?
It is certainly a different economic paradigm. Yes.
And believe it at that.
Yeah. I mean, as with most things in technologies, it gets very dogmatic, right? So, there's people that are going to swear by proof of stake, and then there's people out there that make it their life mission to point out every possible thing that could go wrong with proof of stake, and completely vice versa with proof of work too. I mean, certainly there have been a lot of unintended consequences with the rise of ASICs and Bitcoin. I don't think anybody imagined that. I mean, basically China would be the center of all Bitcoin because they just have better manufacturing than the rest of the world, So it's all a grand experiment. We're still seeing where it's all head.
I was listening to a show the other day that was talking about so many other things blockchain could be used for besides cryptocurrency.
Oh, yeah.
Like voting registration, for instance.
Mm-hmm.
They were saying that was an example. That just proof of that you were allowed to vote. There's a ton of things that by decentralizing and using the blockchain. Or can you think of some other examples of that beside cryptocurrency?
Absolutely. Well, and this takes it back to the original question, what's the value, right? So think about any situation at all. I mean, not just banking, any situation where you're going to take the requirement for trust between two counterparties out of the equation, right? So, and just to kind of expound on that concept, having trust in a business context is generally thought of as a good thing, right? Tony, if you trust me, you're more likely to do business with me. The reason why you guys probably brought me on this show, and I'm one of the first guests that you had on, is because you guys know me and you trust me, and I've been in this stuff, and you trust that I have some knowledge that I'm not just going to make stuff up and mislead your audience, right? So trust is a good thing, right? But
trust is a good thing.
Trust
I agree.
Let me qualify that. Let me say trust can be a good thing, but trust can also be a very bad thing. I'll give you a story from my history, right? So I was, I don't know, a decade or some time ago. I lived in Florida. I was a CFO for a travel company, and we would buy travel vouchers from American Airlines through a trusted relationship that this gentleman had with American Airlines. We would get them at an extreme discount, basically at cost, and we would sell them below market rate, but still, for a profit. And the process generally involved us once a quarter or so buying, 500, 1,000 tickets, 5,000 tickets at a time, which can be millions of dollars. So the business trucked along for about a year and a quarter, year and a half with no real incident. And we had a huge buy come through. Someone wanted to book an entire airplane. So hey, let's get all the tickets we can afford right now. sent over $2.3 million to this gentleman that was going to make the purchase that manages the relationship between us and American Airlines. And he just decided to walk away with that money. We trusted him. But him having that, us having to require trust as an essential piece of our business process was an exploitable vector. And you can count on one thing in business, give it a long enough timeline. If there's an exploitable vector, it will be exploited for business gain. So that's in the context of that. What if we were using a blockchain-based relationship, right? So are you guys familiar with the term smart contracts? Has that come up yet?
No, I'm not.
Okay. So, all right. Take that example and put it aside. We're going to come back to it. So there's another way to kind of break down, classify different types of blockchain. There's the blockchain that Bitcoin is, and Dash, and Monero, and Zcash, and a lot of the blockchains that are in the top 10 market cap token. And then there is the type of blockchain that Ethereum is, and that Neo is, and Stratus, and several others. And this category of blockchain is called a Turing complete blockchain. Turing is an Alan Turing, the code breaker from World War II. And what that means is, if you think of blockchain as, in essence, a giant database, a ledger where you're storing information, it's like a giant hard drive in the cloud, to oversimplify a little bit. If that's what Bitcoin is, a Turing complete blockchain is a hard drive plus a CPU, meaning you can write simple software and have it execute on this blockchain. And that execution of software is commonly referred to as smart contracts. So to give you an example of what that means, is that means I can take, and this is really where kind of this takes on a whole new set of applications, your minds will get blown. You can take anything that's objectively measurable, right? So anything that you can think of that, like, there's not a subjective answer, there's not somebody sitting back going, maybe, maybe not. No, things that are objectively measurable, hard numbers. Anything objectively measurable, you can say, okay, if that condition is satisfied, then we will release the tokens. We will consider the contract satisfied, and parties will get paid in the manner in which they agreed. So
basically programmable money.
Yeah, exactly. Yes, exactly like that. For going back to the example of where I got screwed, my company went out of business. We're talking about where we're buying those airline tickets. It's a digital asset. Basically, we weren't buying paper tickets. We were buying 6-letter confirmation codes, which is something objectively measurable. I was paying for 500 or 1,000 or whatever the number was, 6-letter codes that would verify if you plugged them into the Sabre booking system. That's something I can program software to check objectively. If it satisfies these requirements, if those were uploaded, I could take the money in escrow in the smart contract and release it to the gentleman that was facilitating the purchase of those tickets for us, rather than, just hoping that he didn't steal my money, which was what our business model was.
So in this case, trustless system is superior than using trust, in other words.
Correct.
So do you see in the future blockchains growing into all these other businesses or entities, different things that blockchain will be used as a normal function in business and other things?
Right. I think so. So here's the reason why IBM and Oracle are really super interested in blockchain. The primary application they want to use it for is for supply chain management. And think about how stuff is right now. Okay, let's go back to Walmart, which is one of the first early adopters of HyperLedger. But if we go back to a pre-blockchain world, they've probably, I don't know what they use for an ERP. It's probably SAP or Oracle or something else. I don't know. But they have their own logistics system, a giant enterprise resource system that for coordinating buying and selling of goods and services to their suppliers and to their customers. And if you want to participate in Walmart's ecosystem, you have to trust them. You have to trust that they're not playing with the numbers behind the scenes on their Oracle installation or SAP installation or whatever it is they're using. They're not trying to jury rig things just to be in their favor. Because really, if you're in the world of working with a company like Walmart, you probably don't have too many other choices. It's like Walmart, Target, who else? Who else has that kind of scale? So what blockchain does, it says, guys, you don't have to trust me. You don't have to trust me. I'm Walmart. I get it. I've got a bad reputation. I do some shady stuff all the time. Don't trust me. It's all open. It's all available for everybody can see exactly what's going on at any given point just by looking at our shared blockchain. I don't own it. We share it.
Wow. Okay. Well, Mark, that is some pretty interesting stuff there on the... I understand blockchain now, I think, which I didn't before. I thought I did, but now I really have a good concept of it. We need to be wrapping this up. We're try to do about 30 minutes on the interviews. We're a little over that. Is there anything, Tony, you wanted to hit Mark up with before we wrap this up?
I think we covered a lot of great topics. I guess one last question is, do you see Bitcoin, or is the architecture of Bitcoin enable smart contracts or other programming in the future? I mean, isn't the Lightning Network some element of programming?
Yes. Lightning Network will enable a lot of that. That's going to be coming along because of some of the SegWit upgrades. The question with Bitcoin is, how fast will it get here? And will other blockchains beat them to the punch? Because they have their own governance issues.
Yes, the governance issues are quite intense. Let's put it that way.
Mark, yes. Is there anything you want to leave everybody with that we might not have asked or gotten to?
Oh, I could give you a list, but then we would be here for another couple of days. So
that's what I figured. Well, you'll come back, right? You'll do this another time, right?
Absolutely. Anytime you want.
After all, you are our first cousin. I mean, Cousin Rizzn. I mean, you're our first cousin. We got to have you back. Hey, where can people follow you or see your blogs and stuff at, Mark?
So Rizzn.com, RIZZN.com is the blog I've maintained since the 90s. I archive all of my Bitcoin and blockchain specific stuff at AskDrBitcoin.com. And if you want to see anything I do in a professional sense, we also blog about Bitcoin and blockchain from time to time over at rogerwilco.agency.
Well, Mark, thanks for joining us. Our first interview on the Crypto Cousins. Now there are three of us. And until we have you back, thanks, Mark.
Thank you, Mark.
Thank you.
Okay, we're back. Wow, I feel like I know so much more than I knew then. But it was a great, great interview. I mean, that was a lot of great information.
Yeah, he really knows his stuff. He's been doing it. It's not theoretical with Mark. I mean, he's been in the field for a really long time.
Yeah, he really is. Mark, I want to make sure you know how much we appreciate you coming on the show and being our first official cousin. Even though we had Trey on the show and he was a cousin before you on the air, you were the first official crypto cousin. So thanks for coming on the show. And Mark said he'd come back, so we'll have him on in a few weeks. Hey, also, I want to make sure if you're listening to this show on your computer, or you're sharing a friend's iPhone and listening, or you're just overhearing someone talking and listening to this show, make sure to subscribe to our show for yourself. Go on iTunes, go to cryptocousins.com/iTunes, and on Android, cryptocousins.com/play. Subscribe to the show, leave us a comment, give us a 5-star review, help us grow this. We appreciate that very much. And don't forget to check out our Facebook group, cryptocousins.com/Facebook group. Tony, what do you think?
I think we better wrap it up.
Yeah, we've been on here a while, and with the interview and stuff, a lot longer than normal. Hey, thanks everyone for listening. Oh, and next week we're going to talk about online wallets. We're starting to get to know that, and we'll have a surprise for you next week on something we're building.
Mm-hmm. Yes, we're always building something.
And don't forget again to call us at 747-777-9471 and leave us a comment or just send us an email. Thanks for listening.
Yes. Thanks, folks.
Bye.
Thanks for listening to the Crypto Cousins podcast. Please share this podcast with anyone you know that is interested in cryptocurrency. Your friends can subscribe on iTunes at cryptocousins.com/iTunes and on Android at cryptocousins.com/play. If you want to know more about Tony or Gary, just go to tonysakala.com or garyleland.com. Make sure and join us on the next episode, and thanks for listening. The Crypto Cousins podcast and information in the podcast are not intended as investment advice. Cryptocurrencies are risky. Never invest more than you can afford to lose. Always seek professional advice before making any investment. Investing in Bitcoin and other cryptocurrencies may present tremendous risks. Please understand that you are using any and all information available on or through the Crypto Cousins podcast at your own risk.